All right, we're good. Good morning, everybody. Good afternoon to my friends in Europe. I hope everybody's doing well. It is Monday, November 18th, 2024. This is the Ticker Highlight Show. Reminder, we're here every Monday at 10:30 a.m. Eastern Time to go through one ticker in detail from a fundamental, from a volatility, from a chart, and from a stock owner's approach. So with that, and let's dig in. All right. So I am Mark Sebastian. I am your only option. I'm joined by Andrew T. Giovinazzi, the Viking of Volatility, and Hans Albrecht, the income imperialist. And we will be joined momentarily by Alicia J. Leslie, the Queen of the Candles. So we will have everybody on board here. Alicia, I see you here, but not in the broadcast for some reason. It's a little odd. Yeah, you sound good. Christian, can you take a look at this? Because I can see her in the room, but for some reason I couldn't see her. And anyway, so let's dig in and let's start with what we think of Coinbase as a fundamental asset. And all right, we got them all. All right, we've got the quadfecta. There you are, Alicia. And let's just start with what we see out of Coinbase as on a fundamental basis. So there are some things to like about Coinbase. They make, here we go. They actually make money. They are producing positive revenue. Their cash flows are going. They don't have a lot of debt. So there's a lot there to like. The issue you have is with the valuation, and it's trading 54 times earnings. And the assumption is that as Bitcoin interest goes, and as Ethereum and some of these other coins go, their trading will increase dramatically. What I fear is that you're going to start seeing some of the main players enter the space. Right now, a name like Schwab, which is trading at a 30 PE, is not really in crypto. Goldman's really not in crypto. Merrill Lynch, Bank of America, not really in crypto. What happens when some of these big names enter the space? I don't see the same barriers to entry as a lot of spaces, especially if you're already in the brokerage space. It's really about, do they start housing crypto and crypto investing? I don't think that's a big leap for them. And so that is one of the issues I have. The other issue with coin is how correlated it is to movement in Bitcoin. So Coinbase, prior to the election, was trading $184. Post earnings, it's now trading at 305, and that's because Bitcoin has gone from 60,000 to over 90,000. And here's the question: is coin really a good way of expressing a long Bitcoin position? And this would be where I would ask you to look at a broker like Schwab and ask yourself, okay, should Schwab go up because the stock market goes up? Or should Schwab go up because there's more transactions? Now, there's some correlation between transactions and the market moving higher. But, it's Schwab's basically sitting where it was in May of 2024. Coin is really it's seen a valuation increase of almost 50% in a couple of weeks because of crypto's explosion. And I just don't see the correlation there. Do I like coin when it gets back toward 200? Yes. Right? Because that is going to put that PE, that price earnings ratio, back toward a 30 to 35, somewhere that makes a lot of sense. Up here, do I think it makes a lot of sense for a coin to be trading this high with crypto? I think the correlation is too tight, and I don't love the relationship. I think we've got to look at it more as a broker than as a way of expressing my bullish position in crypto. Now, you could say it's a bullish view of the crypto space as a whole, but that would then bring in what barriers of entry are there to Goldman and Schwab and Bank of America and all of these other firms from stepping in and opening their own crypto housing? And the answer is very little, and that's one of the, I think, the real risks to coin. They don't really have a moat, right? You know what a moat is, everybody? Well, you put a moat around a castle and it stops people from being able to get close to the castle, right? Because you've built a protective moat around it. And I don't know that coin has one. So with that, I will stop sharing my screen and I will invite the Queen of the Candles to tell us what she sees near term in the coin chart.
Thank you, Mark. Coin traded right to the top of my little interior pitchfork I have here. Well, I shouldn't say little, it goes way back here. It goes way back to June of 23. And it traded right up to it before reversing. Traded down to my support of the convergence of that previous high and the median line. Nice bullish candle Friday. Today we're coming up on resistance 308.25. And once we break through there, I say we visit 333 again. We don't break through that 308.25, we come back down and revisit this area, 286, 285. Looking bullish though.
All right.
That's what I get.
There you have it. All right. Now, a new segment we've added is, hey, I own this stock. What should I do? And what are some ways to maybe juice up the income on my stock position? And for that, we have Hans, our imperial lord of income, or imperial overseer of income.
I got one, Mark. The O'Neill calls. The calls are
the call selling Canadian.
We'll make that one free. The call selling Canadian.
Yeah,
that's good too. Good too.
So
yeah, we do this. We sell calls up here too. It's a bit colder, but it doesn't affect our. But we hold hard cash, right? Because we're so far north, like older. Okay, so yeah, I love your points, Mark. I think the brand, and I think a good head start on this sort of business can be kind of a little bit of a moat.
Yeah, Hans, you're kind of breaking up a little bit.
Kind of see this as almost like a pick and shovel, right? Like instead of owning cheap coin or one of these coins, you can almost like the man purveyor coin.
Yeah, Hans, you're breaking up a little bit.
Yeah,
I'm not sure what the deal is with your.
Do you hear?
With
you guys hear?
You were kind of garbled.
Is here okay? Okay.
Yeah, you were garbled there. I'm not sure what the deal was with that.
Let me try.
So. All right. Well, we'll try and get Hans sorted out here. Yeah. We'll get Hans sorted out. In the meantime, let's swing to Andrew and have Andrew. Andrew, why don't you share with us what you see in the option volatility, and then we can see if we can come up with a trade.
Okie dokie. Let me share my screen here. Sharing the screen. I wanted to hear Hans's thing, and
I know.
I'm hosed. But we will return. Okay, so I just wanted everybody to look at this. So I got my chart here on the screen. So do you guys see here, like, this is 10-day realized vol and coin since the Donald got elected. So there was coin this year, and there's like coin after he got elected. So I don't know about you, but there's this story over here. Okay. Story, volatility, blah, 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 blah. And now there's like this story. So coin is clearly, it is a different stock than it was, even though it was a very volatile stock before. It's now super volatile. Okay. So we could easily see 20, 30, 40 point swings, whatever, because all of a sudden we could have the Doge of Washington. Who knows, right? Or the coin of, who knows? So there is this leads to a lot more speculation and boom and bust. I feel like this is more like a gold rush than anything at this point. So some people will do really great, and others won't. So there will be some swings in coin again in the foreseeable future. So this is really hasn't died down a whole lot. Like, you're seeing these candles, and I don't know, I was like, Alicia, your take or Mark's, but have you heard any like new news for Bitcoin? All I've just seen people is just buying it because there ain't a lot of it.
Yeah,
it's like I haven't heard any new news. So it's kind of
the idea that the Department of the
organic,
Treasury is going to own $100 billion worth of Bitcoin, I think, is kind of out there.
Andrew,
How pumped up all these options are now. So
I have heard of individual states trying to incorporate it into their budgets, into their coffers.
Right. So I look at this and I'm like, okay, we're getting 10, 15, 20 point swings a day, and the vol is 80. You got to hold your nose and buy it. I'm sorry. That's what I would do. We can look at some strangles, but it's up. I mean, what was the range today? We had a trade as low as 290. Now it's 308. So it opened down it almost opened down like $20 from where it is right now.
Mm-hmm.
So 20, you're already talking almost an 8% move. An 8% move is what? Like 124 volatility? It's crazy. So you have to, it's like, if you're going to trade this, you got to it's like holding on to a bucking to a bull in a rodeo. Like, you're going to be dragged around. It's a big beast. So that would be my take on the vol here. So, as amazing as it is, it's like, I don't really think coin is, again, trying to think of a relatively simple trade. I like the pricing of calendars, as odd as it is, but I would make them very wide. Like a 350 upside calendar and a 250 downside calendar, like some kind of double calendar setup, to be long volatility still. But But try, like, if it swings up, sell the call calendar, swings down, sell the put calendar. I think that would be like a theta positive way to do it. You know, a more, I'll leave Mark to the kind of the simple idea, but that would be along the lines, because right now, let's say the December 6th, like the December 6th straddle is $50. So I think your 350 call spread, call calendar, 250 put calendar, do the double calendar and then ride that thing. And then just sell whatever side kind of hits first. And I think you'll make some money. The only reservation I have is that is as high as some of the short-term vols are in the low 90s. I don't think it's high enough. So that's why I'm like, okay, I like the idea of it, because there feels like but you know, it's just hard to buy a $40 strangle and a $300 stock.
Yeah,
It's
folks,
probably going to pay.
let's put this in perspective. So today is Monday the 18th. The options that expire on Friday are pricing in $30 of movement between now and Friday. So 10% of the value of the stock,
Yeah,
which is bananas. Now, the other piece that's really interesting, Andrew, why don't you show them the skew chart?
Okay. So let's take a little look at,
because what this shows you when you drop it to 10%, and then just show December.
and then let's do none, and then we're just going to do here. You know,
And
look
what
at
it
how
shows you is Coinbase is trading a little over $300. And so, believe it or not, downside puts are near the money are actually cheaper than upside calls, which shows you that this is what we would call, and then crash puts are really expensive. So what this shows you, folks, is that there is a ton of near-dated speculation and a lot of people who think that the rug could get pulled very quickly that are bidding up downside, far out of the money downside puts, or units as we would call them. And that is where, you know, this thing really does look interesting. So the only way to trade this thing is to spread it. Whether you want to go long or whether you want to go short, the only way to trade this is to spread it. I like Andrew's calendar idea. If you wanted to go simpler, the approach I would take would be a call spread of some kind, something simple along those lines. They're pricing in $30 of movement, which means you can buy the 315 call for $14, and you're getting $7 out of the 340 call. So you're getting a 20-point vertical, and it's going to cost you about, you know, a little less than $7. That's about 3-to-1 risk reward. That's how you which is about normal, right? This is where the learning how to understand different spreads is so valuable to traders. They need to understand when is the time to go outright option and when is the time to just spread. And, you know, with Leisha saying we're basically at a spot where it could go up or down, I would. And interestingly, when the market was selling off on Friday, what was happening to crypto? Anybody? It was going up. And now today, market's going up, and what's happened to crypto? Going up. So if you forced me to put on a trade, yeah,
Coin did just break through my resistance here.
Yep. So if you force me to put on a trade,
No one hears me.
Yeah, I'm hearing you. Coin just breaking through Leisha's resistance level. The trade I'd want to buy the November 29th 315 calls. Those are going to be $20. And then I'm going to sell the 350 call at $10.50. It's going to be $9.50 for a 35-point flop, 35-point vertical that only has a week and a half, that has 2 weeks to go. That is great risk reward. I'm getting
so Mark,
almost
what was the spread again? 315 what?
the November 29th, 315, 350 call spread for about 950. So that's a 35-point wide, and it's less than $10. That is better than 3-to-1. That's like 3.5 to 1, 3.6 to 1. That is really good risk reward on a call spread that is that wide. And now, what am I targeting for a profit here? This thing gets to 15, 16, 17 bucks. I am out. These moves are quick. So I want to be in this trade for less. If I'm in this trade for more than 72 hours, I am probably going to lose.
Well, there you have it.
There you have it, folks. We'll get Hans figured out, everybody. In the meantime,
I agree with it. Quickly, take your money.
yes, yes. One of the lessons I learned from Leisha is that it's important to liquidate those profits without leisure. All right. So again, we'll get Hans figured out, everybody. We'll be back next week with another stock for you on our ticker highlight show. Remember, we're here every Monday.
Leisha's not always good.
What? What, Leisha? What was that, Leisha? I missed what you said. All right. We'll be back next week. So for Leisha J. Leslie, Queen of the Candles.
I'm delayed, so ignore me.
All right. Leisha J. Leslie, Queen of the Candles.
I'm delayed, so ignore me.
Andrew T. Giovinazzi, the Vicar of the VIX and the Viking of Volatility. I am Mark Sebastian. I am your only option. Again, we'll get the technical stuff figured out. We hope you have a great week. And again, be tight with those profits. Have a good one, everybody.